Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate documents. Today we're diving into a report from Coca-Cola Consolidated. I know what you're thinking, Coke, what could be exciting about that? Well, let's just say things are about to get bubbly with a stock split. This report spills the beans on a big decision Coca-Cola Consolidated made a little while back, including how its shareholders voted and what it all means for the future of the company. The main event, a 10-for-1 stock split. I'll walk you through what that means, why it matters, and what other important details were revealed in this filing. Before we dive in, if you find corporate analysis helpful, hit that subscribe button and come join our Discord channel. You'll find a link in the description below. It is a great place to talk business, finance, and investing with fellow nerds. This report is called an 8K, a type of document companies use to announce major events. The earliest event noted was back in May. The big news is that Coca-Cola Consolidated stockholders gave the thumbs up to changing the company's official paperwork, its restated certificate of incorporation. This change was specifically made to allow a 10-for-1 stock split and to increase the number of shares the company is allowed to have. Think of it like cutting a pizza into 10 slices instead of one. Everyone gets more, but the pizza is the same size. This change officially went into effect a few days later after being filed with the state of Delaware, where the company is incorporated. If you owned shares back then, you would have received 9 extra shares for every one you already owned. So if you had 10 shares, you'd now have 100. After the split, the stock started trading at a lower price, but you have more shares. It's like exchanging a $100 bill for 10 $10 bills. You still have the same amount of money. The hope is that the lower price makes the stock more attractive to a wider range of investors, potentially driving up demand. Even after the split, the stock will still trade under the ticker symbol FE on the Nasdaq. The par value, which is a somewhat outdated term for the minimum price a company can sell its stock for when initially issuing shares, will also stay the same. Now let's shift gears and look at the reasons behind the stock split. Usually companies do this when their stock price gets too high, which can discourage smaller investors. The report also covered the results of the company's annual meeting of stockholders. One of the main things they voted on was electing the company's board of directors. All 12 nominees were elected. Let's take a quick glance at the results. First Midden Dai, for example, got over 23 million votes for him, and about 1.7 million votes were withheld. The other directors got similar results. It seems there was pretty broad support for all the nominees. The shareholders also ratified, meaning they approved, the appointment of PricewaterhouseCoopers as the company's independent auditor for the year. This is pretty standard stuff. There were over 26 million votes in favour of keeping PricewaterhouseCoopers. Only a small fraction voted against or abstained. And of course, shareholders also voted on the stock split itself. The vote here was overwhelmingly in favour, with almost 26 million votes for the split against about 440,000. There were a few exhibits as well that are included with this form. The most interesting is Exhibit 3.1, which shows the actual certificate of amendment. This amendment legally authorises the company to execute the stock split. Now, let's step back and put this into perspective. Coca-Cola Consolidated is one of the largest Coca-Cola bottlers in the United States. They manufacture, sell, and distribute Coca-Cola products, so this stock split reflects the company's confidence in its future growth. By lowering the stock price, they're hoping to attract more investors, which could lead to more demand and a higher overall valuation. The move is a positive one mostly. While the move itself does not affect the company's valuation, it makes it easier for smaller investors to join. So that's the breakdown of Coca-Cola Consolidated's recent report. What do you think about this stock split? Is this the right move for the company? Drop your thoughts in the comments. If you found this analysis helpful, hitting that like button really helps, and subscribe for more deep dives into the world of corporate filings. Don't forget to check out our Discord channel in the description below, and thanks for watching. See you next time.